Yeah, look, I think the definitive answer is the long wait for the IPO market globally to reopen is over. We have an open market, particularly in the US. Volumes there running up 60% year on year, albeit still 50% below the 10-year average. And here in Europe, we've had some major transactions happen this year, and volumes there up 30%. So I think we're through the debate, is this open or not? And now we can go into a much more normalized market over the coming period.
Okay, begs the very simple question, why, Gareth? What changed to make the markets more amenable to the sellers and buyers and getting these deals done?
Look, the demand side has remained pretty robust throughout this fallow period. You've had equity markets at all-time highs. You've had volatility pretty much at low levels throughout that period, and investors are sitting on a lot of capital. So this has never been a demand side of the story problem. It's been much more about the supply side. The reality was in 2021, particularly the private equity group, they had sold a lot of stock in that period, and therefore they didn't have a lot of pressure to be monetizing. And I think now what we're seeing is we've seen the peak in US rates. That's a key hurdle. And secondly, I think just because of duration, a lot of these assets are now maturing in portfolios. The IPO market is a really important way for them to look to exit those assets. And we're at that period right now.
Gareth, can I just bring up some of the other demands here for investors, cash? And we're talking about this fundraising from OpenAI, very big fundraising. Is this detracting some money, do you think? Are investors looking at the AI opportunities and perhaps slightly less interested than they should be in the IPO market?
Look, it is the compelling narrative in global stock markets, and it is the real growth hope, I guess, for a lot of investors. What we generally see is the IPO market will tend to track the key trends that we're seeing in secondary markets. The one comment I would have, when I look at the pipeline of what we're seeing coming, there is a much broader and therefore more sustainable portfolio with consumer companies, financials, industrials, complementing the usual support in the US market for tech and healthcare. So AI will be important. Technology will continue to be important. But the difference this time relative to 2021 is a much broader portfolio of companies being represented in the pipeline.
Gareth, we were talking before about Shein. I know it's tricky sometimes to talk about individual companies, but I was making the comparison to Deliveroo because before that company came to the London market, there was a lot of difficulty as to how to digest a technology name like that, how to value it. Do you think any of that's disappeared as we talk about more technology coming to London?
Yeah, look, I think at this point in the cycle, I think there's two things I would say. I think one, it's important to recognize the UK market and regulators have done a huge amount of work to make the UK more attractive as a listing venue. I think that's having resonance. And the second point is that at this stage of the reopening of this cycle, investors are really focusing on larger assets, which are therefore more liquid, higher quality assets, and where they've got real conviction about sustainability. And that's why I think if you look at the deals done year to date, and Standard Aero in the US this week at $1.5 billion of issue size is a good example of that. That's exactly what we've seen. As the process matures and the IPO market normalization occurs, we'll start to see more smaller companies coming through. I think that's the way I would look at that.